that we're talking on is e-regulations, compliance and technology, a peek into changing regulations and role of technologies. Starting off with the moderator himself, Mr. Sunil Sharma, President, Chief Actuary and CRO, Kotak Mahindra Life Insurance. Can we have Mr. Sharma on stage with us? Our next leader is Ms. Mallika Mittal, Chief Risk Officer, Mahindra Finance. Our next leader is Mr. Siddharth Vishwanathan, the Chief Risk Officer of KreditBee. Mr. Deepak Patkar, Chief Risk Officer, Fullerton, India Credit Company. Okay, Mr. Deepak Singh, the Chief Risk Officer, Aditya Birla Finance. Our next leader is Mr. Rajaram, Manian, Chief Risk Officer, Adani Capital. Our final leader for the panel is Mr. Ankur Maheshwari, Chief Financial Officer, Freo. Beautiful panelist, stage is all yours. Thank you so much.
Thank you. Good afternoon, friends. It's a really interesting session, and we got surrounded by various experts here. Quite a few of them are chief risk officers. We got CFO, and the CROs with a lot of expertise in the information technology. I think the NBFC sector has gone through various challenges over the last few years. Pandemic period was the most difficult period for most of the NBFCs, wherein obviously the entire economy was affected by the pandemic, and obviously resulted in a lot of slowdown. There was some credit risks, there were some defaults which happened during that period, but I think it's bounced back to close to normalcy now, and is looking forward to a significant growth in the NBFC. The industry is going through obviously various challenges. Expectations of the regulators are relatively getting higher and higher as the overall NBFC sector is growing. And looking at the importance and the criticality of the sectors, I think more and more regulations are coming in to see how could really the interest of the investors or perhaps the customers can be protected, and also ensuring that all the NBFCs are sufficiently capitalized and are solvent to really make sure they meet the needs of the customers. So in all this backdrop, I think the topic is quite interesting, and I really feeling great to be among various experts here. So I think if you look at the whole model has gone through various changes, resulting from pandemic, and also the corresponding response that has come from the regulators with regards to protecting the customers, etc.
Sure.
I would like to really ask, I think maybe we can just, how has the role of chief risk officers and also Ankur for you, CFO, has evolved over this period? What are the various challenges you faced in your businesses, and what helped you to manage those challenges? And again, we can have each of the speakers to really comment on this.
Sure. So I guess I can put these things into perspective when it comes to digital lending or banking over a period of time. So I guess when I look at the things, I classify the entire financial life cycle of a customer into a single word, which is called BIS. That's my term, of course, which is BISS, B, borrow, I, invest, S, spend, and S for saving. These are the four broad spectrum of a customer's life cycle in the financial terms. And India, over a period of time, has evolved a very, very innovative fintech system, including the digital financial inclusion, where it has placed itself amongst the third in the entire world as a fintech ecosystem. If you talk the entire US population, the number of people who are doing the digital transaction in India is more than that. And in fact, if we talk more, I guess everyone knows about the UPI. The last month crossed 6 billion transactions, 11 lakh crore worth of rupees denominated transactions. I guess, of course, the power of the technology across all these four spectrum is quite interesting. So no one can deny that what future is there for the technology-driven businesses, and then, of course, many verticals gives a lot of opportunities. If I talk about the core challenges, see, along with the growth, of course, over a period of time, there are a lot of regulations came in, and it's an evolving sector as such. So, of course, many things are not there, which of course over a period of time will come and fill the vacuum. But the key challenges what the entire sector in the digital domain have faced is, the first and foremost is the entry of the non-serious players in the market. So few people who are actually not focusing on the core funda of the business, they are kind of spoiling the entire industry, and the reputation etc. is also on stake. Second is, it's a conventional transactions versus the modernization of the business. So typically, when you look at the conventional players, they always offer probably what is their inside. So I call it inside in versus outside. Outside in versus inside out. So in the conventional thing, what is their inside with the organization is being offered to the customer rather than considering the evolving preferences of the customers. Wherein the outside in, where with the help of technology, you actually give what is desired and needed by the customer. So that is something the thinking change, the thinking mindset change should come into play. And the third is, across the digital landscape, all the entities and the players need to invest more in the corporate governance, processes, and also the control aspects of the business.
Thank you.
I think we were talking about the role of a CRO, right?
Yeah, I think so. I think it's the challenges over the last 2.5 years in your role as a CRO. What challenges and how did you deal with them?
I think although COVID is a once in a time or once in, I would say, ever event, but I think it has brought a lot of opportunities, and the challenges have brought a lot of innovation. So I always believe that innovation is a mother of all challenges and the diversities. About the lending landscape of the country, it's actually it's gone leap and bound over a last actually what I would say 2-3 years, or it has been evolving over a period of 5-6 years. But we are still trying to scratch the surface. We are far ahead to go. Of course, when you're talking about digitization and also talking about risk management, so I think it has become extremely easy for a risk manager to assess and evaluate the risk that is involved in lending. I mean, it starts from the time the customer actually decides to take a loan or even decides to apply for a loan till the loan is closed. I think technology has helped in the process of application, processing, monitoring, and as well as innovating new products. I think today the risk managers have the ability to monitor risk real time without any lag in time frame or the kind of people that they handle. It has improved the efficiency of the monitoring system, reduced the complexity of the processes that we have. But yes, the challenges, of course, data is a double-edged sword. I mean, I always believe that data is something which is so powerful that it needs to be nurtured, it needs to be understood by the organization. The way it is, the data is collected, the data is maintained, and also the data is actually put into use, for different kind of analysis. I think the biggest challenge that today the CRO has is the balance between ease of business, and while we were talking about the simplicity of lending, and also the quality of the portfolio that you need to maintain. I think that's the right balance that we need to strike. Plus also, while we're talking about the compliance and the regulatory framework, yes, of course, the CRO today has to put in, the compliance hat first, and then, design your processes, design your business, and design your risk management. So I think that's the biggest challenge today that we have. Of course, while we have some clarity in terms of the regulations of digital and other things, I'm sure we will, still do better and better.
Thank you, Rajaram. We'll just hear from Deep.
Thanks, Sunil. So let me give it a bit of a different spin. So the canvas for the CRO was always quite wide. what COVID has done and the aftermath of COVID has been that some of the risk types, so what we call the principal risk types, have gotten more prominence vis-a-vis what traditionally used to be a CRO's role. So credit risk was always there. It was bang in the center of what a CRO is supposed to be doing, which takes care of everything, the journeys, the portfolio monitoring, all of that. But now what has taken center stage, more so because of the digitalization and the digitization and post-pandemic, things like information and cybersecurity, so that risk has come center stage. You have the operational and the technological risk, that again has come center stage. You have things like capital and liquidity risk, that again has come center stage. And then you have your typical, you have your reputational sustainability. So sustainability, which is ESG, is again something which is gaining more and more prominence. Reputational risk, your data privacy, your data breaches, how to do, when to do, how to onboard customers, how to transact with those customers, how to service the customers. The traditional things of credit, your compliance, your conduct, they are still important, but they perhaps are not the be-all, end-all of what a CRO is supposed to be doing. So I just think that perhaps the canvas for a CRO has become that much more wider now. Okay, so I thought I'll just give that different perspective into what a CRO's role has become and how it is evolving.
I think we were just talking about, the NBFCs has gone through significant amount of challenge over the last 2.5 years, resulting from pandemic and various, the response by the regulators in terms of various regulations that came in. How has the role of CROs changed over this period, and what are the various challenges your businesses face, and how do you deal with those?
So let me start off with giving a little bit of perspective from the point of view of, let's say, new gen fintech NBFC, right? So when we started off in 2016, the idea was to come up with a completely digital flow, as against, I think, the traditional scheme of things wherein it was all offline and then people are trying to move online, and I think a lot of success has been achieved over there. I think our journey was probably the exact opposite of that, wherein the thing is we started off completely online, and then 2018, 2019, I think it was a complete digital journey. The decisioning and all was done in real time. We pretty much used a lot of traditional and alternate data sources. There was a decisioning engine which pretty much used to kind of spew out a lot of rules, which used to run a lot of rules on the data sources which were there for each and every customer which was getting picked up. And the scorecards were kind of run in real time, and the decision was pretty much done. Two decisions, one is go no go, second one is a credit line, and this probably was one of the smoothest journeys which was there. Let's say in 2018, if you think about it, I don't think there were too many people who were kind of doing this. We fortunately were able to build something which at least was something interesting for the users, which at least was a trendsetter with respect to setting up of the expectations from the customers as well in terms of what can be achieved using technology in decisioning. And this was unsecured retail is what we are talking about in terms of product suite. Now I think that is when 2020 hit, that COVID pandemic and so on and so forth. So till March, I think everything was great. We were kind of continuously optimizing everything digitally. The advantages are brilliant. You are centralized. Any kind of regulatory change or systemic change, whatever you need to do, it is very centralized, and hence it's a lot more easier to do, by the way. Considering that the entire technology suite was homegrown, we pretty much could have a lot of control with respect to how we could kind of execute things. But March 20 is when more or less the lockdown started and so on and so forth, which is where I think the story starts becoming interesting, right? In the sense that the status quo was changed. When the lockdown started opening up, there were a lot of things with respect to resolutions and so on and so forth. Collections kind of was one of the key things that everyone were thinking about, and these likes, right? And by the way, pre-pandemic, the idea was most of the focus was doing digital collections only. But now I think the idea is that you need to start really thinking about from the point of view of practicalities in terms of how to achieve your means, which is like maximum collectability. And that's where you start thinking about the good old offline way of doing things. And that's where things kind of start becoming interesting in the sense that we started thinking that offline collections is something that is a capability that has to be built and developed, and completely digital is probably not going to fly as well. And that was one of the eye-opening scenarios which kind of came out in the B, in the sense that probably completely analog or completely digital is maybe not the way to go, but you really need to come to this digital or hybrid models to make things work. You can be on either side of the spectrum, but you have to pretty much kind of have a middle ground which works out best for you. So post that, we pretty much got into the offline collections capability and so on and so forth, and right now it's kind of working in a hybrid mode, both from the point of view of sourcing underwriting as well as from the point of view of collections. And even underwriting, even underwriting, by the way, has got some manual components, video KYC helps and so on and so forth, but definitely there are additional manual interventions which kind of come into the picture. So all in all, this is how I kind of see the spectrum of, let's say, the growth trajectory in the last 4 years, wherein I think things have become really dynamic, both from the point of view of compliance, the technology and so on and so forth. But I guess the biggest realization really is a phygital way is the way to go, and that's how I think we have evolved.
Thank you. Mallika, what did you, I think some of the points covered there. What do you think, from your business perspective, what are the challenges and how try to cope with that? And how the role has changed, over the last few years? Because I think, some of the risk we never anticipated, it's one or two, we call it 100 or 200 years event. And then some of the risks which were not anticipated at that time, we saw them for the first time. At least I'm from the life insurance industry, and I've seen the claims in one of the quarters which is 5.5 times the normal claims. That sort of, so many people died. And similarly in the financial services. So how challenging it has been? What are the new risks that have emerged and how did you cope with those?
Sure, I think it's a very valid points raised here, and Siddharth, you elaborated very well on how technology has been changing, and especially because of the pandemic time. We moved digital, and the whole world moved digital. It brought in its own kind of risks, and thus I think I'd like to step back a little bit as to how the role of risk has been changing. Okay, let me, and I'm also going back to the initial question as to which era was the best era. Okay, I'm a very, very hardcore risk person at my heart. So why do I like the pre-2008? I just want to touch upon that. Being a risk person, I don't want to waste any crisis. Okay, so the first crisis as a risk person that I faced was 2008, and the retail boom that we were seeing pre-2008, right? And what happened in 2008, and it's very, very important for risk professionals here, because all over the world, the entire regulatory landscape changed, okay? Why did we get into the financial crisis? It was the growth. It was especially in India, we had the retail boom, but all over the globe also, if you see the economies, they were growing really fast, okay? Now what happens is when you have an uncontrolled growth, okay, something probably you had to manage a little bit better, okay, and maybe it didn't get managed, and that's why we got into a situation like that, okay, and then we had the new regulatory guidelines. We had the entire Basel III Accord coming in, okay. This is why I like the 2008, okay, because that was a crisis, and why I'm talking about it right now, because we got into, I won't say exactly second, but probably the second largest, similar kind of a crisis during the pandemic time. Okay, crisis always teaches a risk person. Okay, so again, my learnings here, and which were elaborated well by our panelists here. So yes, digital was one big change that happened. We all were forced to work from home, etc. We went digital. Amazing benefits coming out of it. But we have to now learn the new ropes. And that is why you see the whole lot of gamut of new technology, new regulatory requirements, etc. Okay, now I'm also stepping back a bit of on the just pre-crisis, actually pre-pandemic. We had the regulator ask, it's the first time for the NBFCs they mandated the role of CRO, the Chief Risk Officer. Okay, again, this I think is a big step. And again, this is coming from the regulator. And why? NBFCs today have become so big in the system, they pose a systemic risk. Right? What happened in 2008 was banks had become so big, and probably what they were doing was not enough regulated, and so there was a set of norms. In 2019, when the role of CRO was mandated, in a way, regulator is saying that give the same kind of significance to the NBFCs. They are probably also posing a similar kind of challenge to the system. Okay, and thus the larger NBFCs, they were supposed to be having the CRO. Okay, so that's another big change according to me from the CRO's role point of view. The third change, which I see as a very big change, and it's again coming from the regulatory angle, is the Basel III guidelines applicable now to larger NBFCs. Okay, according to me, it's a very big change. I'm again going to link it to 2008 because that's the time when it came into being. And what it requires is that whatever risks that you're taking, be it in whichever area you're taking credit risk, you're taking operational risk, you're taking market risk, whichever risk you're taking, tie it back to your capital adequacy. Okay, that's again now it's extended to the NBFCs. Okay, I see it as another third big change for the role of CRO or for role of risk management in the NBFC area. The fourth change that I would like to talk about is when you have a number of these changes happening in terms of compliance, etc., even technology, the role of risk takes a very, very critical seat, according to me. You have to lead from the front. You are no more, as a risk person, you are no more just a governor or from the governance point of view, you're no more just doing a governance role, you're no more doing just the analytical role, you are also doing a front role wherein you have to guide business, you have to guide the organization that this is your risk appetite, okay? Have your business strategy aligned to it. So, and how do you do that? You can't just say that follow the guidelines, follow the compliance. You have to give a way out. And this is what I see as another big change. We are moving from merely from a watchdog point of view. From there we are moving actually to the enabler. We are actually helping and facilitating the business.
Yeah.
So I think that's from my end.
Thank you. Deepak, would you like to add anything to what other speakers covered already with regards to the challenges and how you cope up with that in your particular business?
Yeah, so one of the risks of being the last one to speak is everybody's spoken what you've thought, right?
Yeah.
So yes, the life of a CRO has changed a lot over a period of time. And so at the very beginning, it started and ended with credit risk. Today's people spoke about the intensifying regulatory regime, so it's now moved to regulations. You have technology coming in, so there's cyber security risk, there's data security risk that has come in. But there's one thing in the life of a chief risk officer that hasn't changed. Okay, and it is this one question that every board member, director, any of the conferences that you speak at ask you. What keeps you awake at night? And that hasn't changed at all. So really, my sympathies with all the risk managers, including the ones on this dais. We've had very little sleep in our careers as risk managers.
All right, ladies and gentlemen, a big round of applause for our amazing panelists.